Was this week a necessary breather or a warning sign for Micron Technology? After a historic run-up that saw the stock climb over 100% in just a couple of months, the brakes were tapped. One analyst report questioned the company's role in the next generation of AI chips, sparking a debate among investors. With analysts raising price targets to levels as high as $500, the big question is, does the recent dip represent a buying opportunity, or is the rally truly running out of steam? Introduction. Welcome to TickerWatch News for Micron Technology, Week 6, 2026. This is your weekly briefing on the developments and market action for the company. The company has been at the center of the AI-driven memory supercycle, and this week brought a mix of extremely bullish analyst calls and some cautionary news. Stock snapshot. This past week marked a pullback for Micron after a period of intense upward momentum. The stock began the week trading around the $430 mark and ended the session on February 6th at $382.89. This comes after an astonishing rally that took the stock from around $201 in late November 2025 to over $430 by late January 2026, a move of more than 114% in just over 2 months. The broader tech sector has been shaky, with some frustration and worry creeping in among investors about high valuations, providing a mixed backdrop for Micron's performance. The stock's weekly decline reflects some profit-taking and reaction to specific headlines after a very strong run. Top news and headlines. Several key stories shape the narrative for Micron this week. First, the wave of analyst optimism continued to build. UBS raised its price target to $450, Phillips Securities initiated coverage with a $500 target, and Mizuho boosted its target to $480. They weren't alone. HSBC, Barclays, and Piper Sandler also significantly increased their targets, with some arguing that Micron's supply for calendar year 2026 is effectively sold out. The consensus is that a desperate memory market driven by AI infrastructure buildouts will sustain pricing tailwinds for the company. The second major story was a potential setback involving NVIDIA. A report from research firm Semi-Analysis predicted that Micron would not be a supplier for NVIDIA's next-generation HBM4 memory, citing performance limitations. The report suggested rivals, SK Hynix and Samsung, would capture all of those orders. This news directly touches on Micron's ambitions in the high-margin AI memory space and caused a dip in the stock. Third, Micron is making major long-term investments to meet future demand. The company broke ground on a new advanced wafer fabrication facility in Singapore, a project valued at about $24 billion over the next decade. This facility is aimed at expanding NAND and high-bandwidth memory manufacturing to serve AI and data-centric applications, with wafer output expected to begin in the second half of 2028. Finally, company insiders have been selling shares. Fillings revealed that Executive Vice President Sumit Sadana sold over $10 million worth of stock on February 2nd at prices between $429 and $431. This followed a sale in late January by another Executive Vice President, Manish Bhatia, for over $10.4 million. While such sales can be routine, their timing near the stock's recent highs is a data point for investors. Market reaction and investor sentiment. The market sentiment for Micron is a tale of two competing narratives. On one hand, Wall Street analysts are overwhelmingly bullish. The dominant view is that the current memory shortage is a structural supercycle, not a temporary peak. Price targets are consistently being raised, with some analysts chasing the stock's rapid ascent. The narrative is that earnings power could make the stock seem inexpensive even after its significant climb. On the other hand, there are clear points of concern. The report about losing NVIDIA's HBM4 business created a bearish counterpoint, leading to a stock dip. Retail sentiment appears mixed as well. While many are bullish on the AI trend, some on platforms like Reddit have labeled Micron one of the worst AI stocks to invest in, highlighting a degree of skepticism. The insider sales add to this cautious perspective, along with options market activity showing some traders are buying puts, possibly as a hedge against the stock's big run. Technical and fundamental check-in. From a technical perspective, some analysts are flagging caution. BTIG's Jonathan Krinsky noted recently that Micron was trading 147% above its 200-day moving average, a level he described as historically stretched. This suggested the stock's price had moved very far, very fast. It might be due for a consolidation or correction. On the fundamental side, the valuation debate is central. Despite the stock's massive gains, some see it as surprisingly cheap. It was recently trading at a forward price-to-earnings ratio of around 10 to 13, depending on the source. Analysts at Piper Sandler pointed to predictions that fiscal year 2026 earnings per share could reach over $33, which, if realized, would make the current stock price appear quite low. The fundamental story is a tug-of-war between the powerful growth narrative of an AI-driven memory shortage and the inherent risks of a cyclical industry and intense competition. What to watch next week? Looking ahead, the most important date on the calendar is March 19th, when Micron is scheduled to deliver its next earnings report. The pressure is on for the company to beat estimates and provide strong guidance to justify the stock's recent valuation. In the meantime, investors will be monitoring price levels to see if the stock can find a new support level after its recent pullback, or if it will continue to drift lower from its highs near $455. There are a few scenarios to consider. The bull case is that the memory supercycle continues, demand from AI data centers keeps pricing power high, and the concerns over HBM4 supply are either overstated or a minor issue. The bear case is that the exclusion from NVIDIA's next-gen platform is confirmed and impacts high-margin growth, and that the technically stretched chart and insider selling were indeed signals of a near-term top. A base case would see the stock move sideways as the market digests the conflicting bullish fundamentals and bearish headlines. Outro. Thank you for tuning in to this week's episode. This podcast is for informational and educational purposes only and does not constitute financial advice. Always conduct your own research before making any investment decisions. Please consider subscribing to the podcast, leaving a review, and sharing this episode. We'll be back next week with more updates.